Hi, this is Mani from BSc to NSE.com. In this video, I'm going to talk about the basics of what a rights issue is and why a company wants to do it. And as an existing shareholder who has got the rights issue share, what you should try and decide to do and what is the process involved. Now, basically, why does a company want to issue rights and want to raise funds? So there are two ways to raise funds, either by a follow-on public offer or a rights issue. Now the difference between follow-on public offer and a rights issue is that the rights issue is given a little bit priority is given to existing shareholders. In a follow-on public offer, existing shareholders, fresh investors, anybody can come in, right? Now the regulations might be slightly different, but in both the cases, the capital raised from the rights issue is used by the company to either typically pay off the debt that they have or to use for working capital to run their business, to maybe expand their business for the future and all that. But most likely it is typically to pay off a debt or to go through a tough period wherein instead of raising a debt, they can issue fresh shares. Thereby the promoter stake is actually diluted. So the difference between raising a debt and here is that when you issue a rights issue, the promoter stake is also diluted, but when you're taking a debt, the promoter stake is not diluted. So that's the only difference. So as an investor, you have three options, A, B, and C. Number one, as a long-term investor, you want to buy these additional shares, which means you need to pay additional funds. For example, in case of PVR, I'm holding 140 shares. So for every 13 or 14 shares, they've given me one share of rights issue of PVR. And since Reliance, I think all the rights issue is also getting listed in the secondary market, where you can decide to either sell or buy more of it. Okay, so basically you have to apply. How do you apply? Once you hold these shares, the rights equity shares in DMAT, you still have to apply. You still have to apply in ASBA or SEBI website. You have more detailed articles which will list how to do this. ASBA is the old way how we used to apply IPOs. Very similarly, you have to feed in your DP details and everything manually. So it is a manual process where you still need to collect all your DP ID details and feed it and do it. So if you don't want to go through this process, I would recommend, and if you are a small retail investor, it is best to just sell these RE shares in the secondary market. And if you want to buy these shares, you can just buy these shares, buy the 10 shares in secondary market itself. So you almost get settled the same price. For example, PVR has fixed the rights issue price at 784, and the secondary market price currently is trading at 1040. So which is approximately 256 rupees in premium, and the rights issue is trading at 250 rupees. 6 rupees in discount it is trading. So the 6 rupees, if you don't, you can think of it as a commission given rather than going through this process of ASBA and SEBI website and applying for it. So if you don't apply for it, then you are wasting this 249. So rather you just lose the 6 rupees, which is the difference between 784 and 1040. So letting the rights issue lapse, now this is something that I saw online in the Zerodha discussion forum as well, but I don't see why. If you're letting it lapse, if you hold these rights issue share and you're not selling it either on secondary market nor applying for it using ASBA, then you're virtually wasting 10 into 249, 2500 rupees. So rather I would just sell it to somebody else, sell your rights issue to an interested buyer, so who's going to buy in the secondary market itself, and once he gets it, he's going to apply for it, right? He's going to apply for it in the ASBA or SEBI website and pay for 784 and take ownership. So currently the secondary market price is selling at a premium. So the same premium you are seeing in, so 1040 minus 784, this premium is what you are seeing as the price in the RE shares. So once you sell it to an interested buyer, he's going to pay you 2490 first, and then and he's going to apply and pay the remaining 784 per share and take ownership of the share. So thereby he's saving 6 rupees. So that's a decent price, at least like a 1% arbitrage or something is there for him. So arbitrage hunters will buy it from you. or bigger investors who want to, do that arbitrage and gain, they will do it. As a retail investor, I would recommend just selling it off. And if you want to buy these shares, just buy these shares directly in the secondary market immediately. So if the rights issue goes through successfully, then it could be seen as a positive for the company, wherein the company is able to survive and expand for the long term, and a company like PVR, who's a monopoly, may go on to eventually survive the corona period and expand and add value for the shareholders. So similarly, the same thing happened with Reliance, where they wanted to pay off the debt. So once everybody applied for the rights issue and the company was able to raise funds, it got seen as a positive, and the share price further rallied along with the market also, which rallied. So whether the share price goes up or down post the rights issue application getting over depends on various other factors. So whether how many people applied for the rights issue, how much funds the company was able to raise, and the market sentiments, of course, right? So these are the various things at play. For a retail investors, for me, I'm just holding 10 shares. You can see this is actually, I've just cut copy pasted here from my Kite Zerodha holdings. So I was holding 140 shares, so I got 10 shares of rights issue. Now, as I see it, it is just better to sell it off here, and if I'm interested to buy, I can just buy it in the secondary market itself, paying the remaining amount, and some government taxes and brokerage goes off. In case of Zerodha, the delivery brokerage is 0, so I can just do that. So that way I save myself of going through the process of applying for the rights issue through ASBA and SEBI. So for a retail investor, this makes sense. For a very, very large investor, they may try and accumulate more shares, and who want to accumulate the stock further, then they may buy more shares of RE and then apply for the rights issue and take ownership at a little bit of a discount here. Okay. So this is basically the crux of it. Any questions or any queries, post on this video. I will try and reply back to it. Thank you. Bye-bye.